Hi, everybody. Welcome back to VCTV. Someone is already rocking and rolling in the background. It is great. Awesome. Here we go. We've got a great cast of characters of the VCTV family who have joined us to share their thoughts and insights.
Touch the pride I feel when I see the two human beings chatting.
All right. Well, it looks like we've got some IPO talk in the background. We are going to mute everybody. There we go. All right. Let's start this all over again. Welcome back, everybody, to another episode of VCTV with your host, Kyle Ellicott. I am here joined by an outstanding cast of characters at that. Today, we're going to have a lot of fun from the VCTV family. Big thank you to the Latoken team and to Hasvik for making today's episode possible. We're going to talk about the success and failures, lessons learned of fundraising, what it all means to each and every one of us, some of the lessons we've learned to help you in your journey here at the end of the year in 2021 to prepare you for next year's journey in 2022. Quick introductions, everybody. Actually, before introductions today, I want to jump into the first question and hear one of your hard lessons learned in fundraising. And in that, kick off your introduction as well. Kevin, let's start with you. What was one of the lessons you've learned in your fundraising experience, and a quick introduction on yourself as well?
I think the one big thing that most fundraisers do is try and, they leave it too late. The amount of conversations I have with people coming to me saying they need X amount of pounds, dollars, whatever, and they need it in 3 months. You need to plan, you need to do it properly, you need to allow enough time. So that's the big lesson. So I'm Kevin Smith. I run Boom & Partners business consultancy. We work with early stage businesses, helping them to scale. And an awful lot of that is about fundraising. So getting them investment ready, making sure they know what they're doing, when they're meant to be doing it, and how to go about it. And I've just written a book called Startup to Scale Up.
Wonderful. Thank you very much, Kevin. That's right. Understanding how much cash you need is definitely always key. Jason, welcome as well. Same question to you. Success, failure, lesson learned in the fundraising process that you think is very important for entrepreneurs, and of course your introduction as well.
Great. Well, thank you for having me. I'll do a brief intro and then I'll get into the question. My name is Jason Jacobson with Propellant Ventures. We are a seed stage venture capital fund based in the Midwest region of the U.S. We are focused on investing in primarily pre-seed and early seed B2B tech-enabled businesses located in the Midwest region. In terms of a failure or challenge that I've seen entrepreneurs as they're raising capital, there are a lot of them, of course, but I would say make sure that you're talking to the right investor at the right stage of your company. So make sure you do the right research and you're talking to the appropriate investor. I've talked to many entrepreneurs where they're not ready to talk to a VC, and it's okay to have preliminary conversations, but really have an understanding of when you should be talking to certain investors at that stage of your company. So just do your research, come prepared, and make sure you understand the process a little bit.
Absolutely. Do your research, know how much cash you should be raising. 1, 2. Now up for 3. Keith, same question, lesson learned on the fundraising side and a little introduction.
Great. Yeah. So Keith Gillard, Upper Stage Capital. We are an impact and ESG focused buyout firm. We're acquiring profitable companies, making impact across sustainability, wellness, and community. I did venture for 20 years. And before that, in the 1990s, a serial entrepreneur in software and media. I raised money in the .com bubble, or actually in the ramp up to that, and then again during that, and then I got into venture and .com collapsed. And I think the big lesson that a lot of people are ignoring right now is that venture is cyclical. And right now you should make hay. If you want to raise money right now. It's never been easier. There's never been more capital. But this the cycle always comes around again. And you should make sure you raise enough money and that it's structured in such a way that you're going to minimize your pain when valuations reset again. Unless you can get in and out and have a quick exit during this current cycle, you will have to raise money again when we're coming into the down cycle. And it can be very painful. I've been through recaps on the receiving end. I've had to dole out recaps. because it was the only way to keep the company alive. And the other investors I dealt with, they understood that, but they suffered, and their LPs suffered from it too. So make sure you're preparing yourself. It's not always going to be sunny days.
That's very true. Preparing that valuation to grow into, but not overgrow, especially as capital is out there and available. As Keith said, there's never been more capital. I mean, we've seen more venture capital funds launched in the last few weeks than we have potentially in years past. The amount of capital that's flooding through just the blockchain and crypto landscape right now is reaching well over $20 billion. 15 of that was just in the first half. I had read reports earlier that Q3 saw 8 billion, just Q3, 15, 8. We're at almost $24 billion just in that blockchain and crypto landscape. And all other industries are seeing similar type growth as well. So prepare accordingly. Frederick, same question to you, lessons learned and a little introduction.
All right, Frederick Samwell, usually Swedish, but I'm global citizen living and working out of London. And my key advice really is about the timing. You almost always ask too late. And the process is complicated, hence also ask for more. Ask for more than you need today, because otherwise you go from fundraise into the next fundraise. What I'm doing, I'm working mainly with real estate, fintech, and helping companies to find funds. And right now I'm looking for what's next, as I have sold off a couple of companies. And the big warning sign I like to share with many on this call is, when you structure a deal, as mentioned, think about yourself. I have trusted too many, put my personal guarantee on too much, which has had very painful lessons learned. Meaning, basically, if you guarantee anything, you might lose everything and some in the process.
Absolutely great point. Adrian, same to you. A lesson learned and a little bit of an introduction.
First, when you look for investors, have in mind the ideal profile of investor you want. Build the ideal investor persona and start looking and ask yourself where these people are congregating. Next, because when you are searching for investments, it's a sales process. Have in mind that the sales are done at the follow-up. So you need to have a long follow-up sequence, so to contact people many times until they will have a reaction. And also very important, because we are talking about successes and failures, you will have a lot of failures in order to have few successes. So you have to increase the amount of failures and the doors, even virtual, you are knocking to have more successes, and in the end also to be successful in fundraising. I'm Adrian Niculescu. I'm serial entrepreneur and investor, and also I'm a member of the growth team at La Token. Happy to be here again and contribute to our family verse at VCTV.
Absolutely, the family verse. That's good. It's also a game of numbers, to Adrian's point. The more conversations, the better. Gary, same question to you and a little intro, please. Oh, Gary, it looks like we have you on mute there. Small technical difficulty, everybody. We'll have Gary fix that here in just a second. All right, you're back.
I said, part of the challenges, and I agree, is you want to make sure you raise enough money. You want to make sure that your optics of your company that are right, so that you have the right kind of advisors and the team in place, because the narrative has to be 100%. These are, with these hyperinflation times, people are willing to take more risk with their money. This is extraordinary. I haven't seen it before quite like this. So take advantage of while you have the opportunity. People are more risk-taking right now. And, my name's Gary Fowler, and I'm a serial entrepreneur and investor. I've done 17 startups and 2 unicorns. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Evid.ai. I'm the CEO, president, co-founder of GSD, Get Shit Done Venture Studios, premier AI venture studio and hyper accelerator. located in Silicon Valley. So the key is get out there, get them, raise the right amount of money. Don't wait too long, and you don't want to be going from round to round because you'll never be able to focus on your business. Raise the appropriate amount, and the investors are there today to get.
Mm-hmm. And Keith, I want to come back to you on, I think, Gary, I want to come back to you, Keith, on a thing you mentioned about cyclicals and cycles and how venture capital goes in cycles. And right now it feels like we may or may not be going into one. Do you think that this progression that we have, this speed, this pace of venture capital is due to slow down anytime soon? Or do you think we're just going to compound and this is just going to be the norm? We're just going to get bigger and bigger and bigger and more capital in the markets?
I think excuse me, bad timing for my phone to ring.
Or maybe you're phoning in a friend. You need a little backup on this.
Yeah,
little phoning in a friend.
That's my general counsel calling. So yeah, he's a good friend to have. So what you just said sounds exactly like what people were saying in 1999. The new normal. Right? This is the new economy, right? The funny thing was that despite the pain we went through in the early 2000s, if you look at Amazon, if you look at the leaders in that space, and you go out 5-6 years from the dot-com collapse, they actually were tracking really close to what people were forecasting there at the very end of the 90s. But in the meantime, went through a lot of pain. And companies that didn't have enough capital to get through that had to raise capital in that terrible period. I saw 6x participating liquidation preference there in 2001 because companies were so desperate and some investors are so rapacious, they forgot about the need to align the interests of the money with the interests of the management team. And that to me is a cardinal sin. As soon as you get away from alignment, there's just a ticking time bomb. It's never going to result in anything that's good for anybody because you're fundamentally opposed. So I don't believe that this is going to go on forever. I published about 10 days ago. I didn't publish. I republished a post on LinkedIn where I took the graph from PitchBook about the average early stage pre-money valuation, right? And it was $140 million for an early stage company. Now, I'm acquiring profitable companies right now in the sub $20 million valuation range right now, and that's normal. It doesn't take bargain hunting. It doesn't take bottom feeding to find that. That's the valuation paradigm that's playing out in the lower middle markets and private equity. You compare that to venture, and it's incredible to look at. Yet, if we're selling to strategic buyers, they're the same companies, right? I paid $20 million for that profitable company, and venture, the valuation is 200 million plus. I'm going to make whatever multiple the venture investor would make on that deal. I would make a multiple of 10 times higher than that. So, you want to keep that in mind. But looking to recaps, right? Recaps are going to happen. There's no question about it. But if you can align the interests of the investors with the interests of the management, the VCs who can't participate, who can't pay to play, they're going to get hurt, and they just kind of have to accept it and brace themselves for it. But those who can follow on, and those who are doing the recapping, make sure that you re-up a nice big juicy ESOP. Make sure that you've got options, you've got ownership for those people that you need to be working 60, 80, 100 hours a week and putting their life and heart and soul into making money for everybody. Make sure they're going to do well by it. Don't crush them. If you're a company raising money right now, just try to put some language in there that sets you up to have that kind of protection if this is to happen. I hope I'm wrong, but I've been through this a couple of times, and I really expect it's going to happen.
Yeah, with that being said, Keith, Jason, I want to come to you next. I mean, metric of success. How can companies prepare for the next year and a half ahead and be successful for fundraising? Do you have one piece of advice that you would give those, whether that's in the Midwest, whether that's anywhere in the world, but they're looking to fundraise?
I mean, continue to, get customers, generate revenue. The more you can bootstrap, the more you can grow your company, the better position you're going to be in. And you may not even have to raise outside capital, but continue to build some traction with whatever you've got and be resourceful.
Make money. Don't lean fully on venture capital dollars and investment to be your success metric and make your company successful. Find customers, make money. All right, perfect. Kevin, same to you. You just wrote a book on scaling companies. Any advice that you would give for those companies in terms of helping them to be successful in the next year or two as they go out to fundraise and grow?
Yeah, I mean, we've already touched upon lots of things, but I do at the end of this part want to come back to what Keith was just saying and compare the US and the UK. So I'm sitting in the UK. But yeah, so to your question, I think many of those initial answers cover some of this. So it's about raising the right amount at the right time. What's crucial is that you find the right partner, because it's a long-term relationship. You've got to have that think of it as a marriage. It's definitely a medium term. It's probably a long-term relationship, and you've got to get that right valuation. You don't want to have to keep coming back and raising finance, because that's taking your eye off the ball. So all those sort of things that have been said, but you absolutely need to have the right team around you. So not just the core workers, as it were, but the advisory board and all those other people. And time again, we're having the same sort of conversation with clients about making sure all those different metrics are in place and them understanding what they're trying to do over what period, and being realistic on their forecasts and their assumptions. And in this uncertain world that we're in at the moment, is trying to make sure that you're not just looking at the rosy side, but looking at the realistic side, and making sure you can adapt and pivot and all those good things to make sure that you're really driving your business and scaling your business, and you have the finances there to do it with the right people to do it. So I think all of those things are important. And just to come back and pick up on what Keith was saying about the cyclical nature. What's always interesting is valuations in the States are always so much higher than they are in the UK. So over the last 5-10 years, even the listed companies, the Nasdaq has risen much more than the FTSE 100. But certainly when you look at private valuations, it is so much easier to get finance, and at ridiculous valuations in the US compared to what you're ever going to get in the UK. So I think for me, what will be quite interesting is to see whether the market falls back in the UK to the same percentage. It's clearly not going to fall back to the same value because it's smaller in the first place. But I think that whatever way you measure it, it has to be more overvalued in the US than it is in the UK and other markets. It's obviously the sexiest sectors, the techs, the fintech, the medtech, all those sort of areas are the ones that have the juiciest valuations. But likewise, I've worked with many fintechs that have only benefited from COVID, for example. So it's not to say that the market will treat everybody in the same way, whatever that fallback is. So it's still always going to be about choosing the right companies in the right sectors, making sure they've got a good base and all of those other bits in place to drive their particular company forward.
Thank you, Kevin. Gary, coming to you, similar questions. Metric of success. What advice would you give to entrepreneurs looking to fundraise, to build or grow their company in 2022 as we head into the year pretty quickly here?
Yeah, so one of the things that we have to do is they need to make sure they have an online presence, because the first thing people are going to do as soon as they get them on a Zoom call is they're going to check them out. Make sure you've got some articles written, you participate in events just like this. You got to have that online presence and the credibility that's out there. So that's door number one. Door number two is do your research, look through LinkedIn, go through your contact network, which is critically important. Figure out who is a contact with that venture company, capitalist, family office, high net worth individual, etc., and use that person for that connection, because most of the time it's because of a personal relationship that you get to them. They get thousands and thousands. We get thousands and thousands of decks, and the situation is the referrals are really important. The other thing is, remember, we're in a state of infobesity. There's a hell of a lot of data out there. We all are having a problem trying to manage it. Tools like unsupervised and semi-supervised AI and quantum computers are going to be critically important to solve the problems for new vaccines, to be able to take care of our supply chain, to help us get out to space and back again safely. So look at those types of companies and technologies to enhance whatever product or service you have.
Thank you, Gary. On Adrian, pardon me. Adrian, a similar question. Area of success or advice you would give to entrepreneurs for 2022?
We talked about cycles. Actually, history repeats itself, but also the humanity evolves. So this repetition happens at a superior level, and sometimes in a different way. You have to look at new ways to fundraise, use equity instead of huge retainers wherever you can. So work with people who have skin in the game, no matter if the economy is up or down. Also, look at the token economy, which tends to be the new Wall Street, the new playground. And also focus on your business model, on getting revenue, on selling, on having recurring income. So your B2B clients or B2C clients to think that they can't function without your product or service. So no matter what happens in the market, your solution to be one of the last to be deleted from the list of priorities, And this is based on the product you are developing, how people are feeling that that product is theirs, it's part of them, So if you succeed with that, no crisis will be able to bring you down.
Awesome. Frederick, close us out. One last piece of advice for entrepreneurs preparing for 2022.
Speaking and keep to the topic of investing and finding money, think about the right size of pool. So like Adrian said before, find your ideal investor. So it's easy to fish for too small fish or too big. Find the right size for your company at the right stage, as mentioned before. Be very much investable, because so many decks that we see are not to the standard that they are worth to give feedback on sometimes, I would say. And timing and luck is critical. So what seems to be really lucky with the timing, everything from Gary's unicorns, timing and luck are critical. Who makes it and don't in today's super volatile and speedy market. And I can just agree with anyone, like the founders in any business, you're more important than the company sometimes. So just take any of the influencers in the world, they're worth more than the actual company they represent. Take any of the top names and you can just see exactly what I mean. And I wish you the best for 22.
Wonderful. Frederick, where can everyone find you online to continue the conversation as we come to close?
LinkedIn is the best place to find me, and please connect there. And really good to see so many familiar faces on this call. I really appreciate it.
Awesome. Adrian, same question. Where can everyone find you?
I can't understand why don't we create another LinkedIn or something like that. Of course, LinkedIn is my main hub of communication. And also to close with a very short thought, always when pitching investors, think about what's in it for them, because it's not about you. Mm-hmm. Very important distinction. Thank you very much.
Thank you, Adrian. Gary.
Yeah, so these are great times, but you just have to be a little bit different. You got to look at things differently. And as I said, use online. You'll reach me, Gary Fowler, on LinkedIn or Twitter, or check my shows on VCTV, The Founders Report, or GSD Presents. And reach out to me at any time. Gary@gsdvs.com is my email address. I'm happy to talk to you. Thanks, Kyle. Oh, and by the way, happy holidays. It feels really good to see familiar faces coming into the holidays and coming into some more COVID experience. It's good to see a blast from the past. The faces really makes me happy. It's fantastic.
Agreed. All around. Happy holidays, everybody. Keith, where can everyone find you?
Yeah, this has been a great show. Thanks very much. You can find me, Keith, at upperstage.capital. Upperstage.capital is the name of the company and the URL. You can follow me on LinkedIn. It's probably my most active social media area. My thoughts going forward into 2022 are this is still a time to make hay. This is great. All the pains that I've been warning you about here I think are further out than 2022. So enjoy this high time right now. And I'll go back to the point of alignment. Always make sure that a win for any one party is a win for all the other parties. Win-wins are sustainable and have everybody rowing in the same direction. If you are dealing with someone that is structuring things as a win-lose, that's a bad partner. And you should probably turn and walk away and look for another partner, even if that is hard to do. It's easier to do that now than to face the pain of someone who will be your enemy when the chips are down.
Agreed. Jason, where can everyone find you?
Yeah, just next year, I believe, is going to be still a great year, as Keith mentioned. So be resourceful, leverage your network, get in front of the right investors, be very, very professional, have your materials in good order, and understand your business when you communicate it. You can find me on LinkedIn, of course, also at propellant.vc, or you can email me, jason@propellant.vc. So thank you again for having me, Kyle, and happy holidays.
Happy holidays. Kevin, last but not least, where can everyone find you?
Yep, I'm also on LinkedIn. So with a surname like mine, it's Kevin-R-Smith-MSC on LinkedIn, because otherwise there's a lot of us around, or also at boomandpartners.co.uk. But also Startup to Scale Up also has its own page on LinkedIn. So any of those places. But again, another great show. Good to see everyone, and every success to all the companies out there. And 2022 should be another good one.
Wonderful. Happy holidays to all of you as well, and to our audience. Thank you so much for tuning in. If you haven't done so already, please do reach out to each and every one of us. We'd all love to hear from you. Please add context, where you heard us, where you met us, and what you would like to continue the conversation about as well. Big thank you, Kevin, Jason, Keith, Gary, Adrian, and Frederick. It's a pleasure seeing all of you today. And again, happy holidays to each and every one of you. To our audience, thank you again for tuning in. Big thank you to the Token team and to Hasmic for making today's episode possible. Until tomorrow, everyone, have a wonderful day. We'll see you back here on VCTV soon. Take care, everybody.
Bye.